Hi everyone, and welcome to the Offshore Investing for South Africans webinar series. We'll be demystifying, simplifying and unraveling all things offshore investing to help you better understand what can often be quite a complex and daunting world to many South Africans. My name is Sean Cohen, and I'll be your host today, together with my co-host and fellow wealth specialist, Gabriel Bayhack.
Thank you for that, Sean. Today we are very lucky and privileged to have Anthony Palmer, Carrick Wealth's Group Commercial Director, and Corrine van der Merwe of Sovereign Trust South Africa to sit on our panel. Between the two of them, they've got a lot of expertise in the offshore market and the offshore space. And we're very, very lucky to have them on our show today to discuss a few topics around offshore. I think the best way to begin would to start off with a bit of an introduction, a bit of a background. Corrine, why don't you tell the audience today a little bit about your background and expertise?
Thank you very much. So I come from a legal background. I studied at Stellenbosch, did my articles here in Cape Town, and then I joined Sovereign Trust in 2008. We specialize in setting up international companies and trusts, pension structures, anything offshore really. And most of our clients are South African based, but we also do work in Africa, and then we've got about 26 offices around the world through which they service other clients who are tax resident around the world.
Absolutely incredible. Perfect for our topic of discussion today. And Anthony, the man who doesn't need too much of an introduction, I know your CV is quite a lengthy one, so why don't you give the audience a brief introduction?
Thanks, Gabriel, and Sean and Corrine, thanks for being with us today. And thanks for setting this up. Obviously a very, very relevant topic and subject on every South African's mind. My name is Anthony Palmer. I'm a chartered accountant by background, and I've spent 10 years working for bulge bracket investment banks, both in London and New York. Came back to South Africa and joined Carrick from its inception. At Carrick, I'm Group Commercial Director. I look after all products and investments, as well as strategic initiatives. So for example, as we expand throughout Africa, setting up our fiduciary business, etc.
Fantastic. Should we get right into it?
I think we should, and we are very privileged to have such experienced guests with us on the show today, which we can draw the knowledge from. So let's just get right into it. Corrine, Anthony, offshore investing is a topic that's been on every South African's mind over the past few years, if not even the past few decades, right? And I think that the problem that most South Africans have is that it can seem quite complex and possibly even scary at times. And that's actually the reason we're doing this webinar today, is to try to simplify things. So I think the best way to begin this webinar is to just ask the question, in its simplest form, and perhaps Anthony, you can speak to this one. What does it actually mean to invest offshore?
So before I answer that as what it means, I guess also a good question is why? Why invest offshore? And it really comes down to the very, very basic tenets of spreading your risk across many underlying assets and not having all your eggs in one basket.
Sure.
At the end of the day, South Africa is an emerging economy. It sits it's a country at the tip of Africa, and to have all your investments tied up in one currency, one geography, just logically doesn't make sense. Now that the whole world is open to us, for all intents and purposes, South Africans can take out 22 million rand per year per family. Really, there's no reason to have everything here in South Africa. So that I guess is a very simple answer as to why. Your question as to how and what is offshore, well, there's a lot of discussion around that. There's taking your money outside the country using those allowances I briefly mentioned. You've got a discretionary allowance as well as investment allowance, and there your money is through the Reserve Bank and is outside of the country. And then there's other ways where you can get offshore exposure, where you invest locally. The terminology around that is an asset swap, but in essence your money still has to come back into South Africa in rands, even though you've got foreign currency diversification and foreign asset diversification.
So would you say, Ant, that the reasons why South Africans are wanting to go offshore is a part of a broader diversification strategy? South Africa is such a beautiful place that we live in. We are so lucky to have many, many beautiful elements to our country. but we have our own challenges which we deal with every single day, whether it be our alarming debt to GDP figures that are starting to come out with all the budgets going on. We've got political unrest, we've got concerns about corruption within the government. Is this a reason why South Africans are considering offshore?
Yeah, so first and foremost, I love South Africa. I come back to South Africa with my family, and a lot of my friends have come back to South Africa. I'm not exaggerating when I say I miss South Africa every single day of the 10 years that I was away. I miss the sights, I miss the sounds, I miss the smells. I miss the South Africans. I mean, we are an absolutely amazing people. But unfortunately, right now, South Africa is going through a really difficult time on many levels that you mentioned, plus many more. And I was listening to our sales director, Brad Bendel, tell us a story the other day about something that happened to him when he was young. He was 15 years old, he was on a yacht, 5 nautical miles out at sea, and the yacht started to sink. And they had to come together as a team. There were 5 crew members, and they literally had to use buckets to bail water out of the yacht to keep it afloat for 2 days until the Coast Guard came and rescued them. And I believe that if South Africans don't get together as a team, where everyone knows exactly the role they play, and they come together with one objective of righting that yacht and bringing the South African economy back into shape, then unfortunately that sinking yacht might very well sink. And if it does, I don't know about you, but I would certainly want a vast majority of my liquid assets outside of the country, way away from that sinking yacht, in safe jurisdictions, in safe, stable currencies, and in investments that I understand that can grow over the long term.
And Kareem, then maybe to elaborate on the mention of jurisdiction and, are there safer ships, for lack of a better term, out there that South Africans can consider for taking their funds offshore?
There are actually quite a number of jurisdictions where we can go. I think over the last couple of years, Guernsey became very popular. They've got a marketing team that's doing amazing work here in South Africa. And we happen to do, as a company, a lot of international retirement planning in Guernsey. But that's just one of the many jurisdictions that's out there. Clients are considering Mauritius, clients are considering the Isle of Man, they're considering Hong Kong, Singapore. But I think from a retirement planning perspective, if clients want to send funds offshore for a rainy day, one day once they've retired, want to know that the money is safe there and they can live off money in hard currency, I think Guernsey is quite a popular jurisdiction and a good jurisdiction to place your money and to open your investment accounts and your retirement planning.
Just touching on that point, you made some very valid points about the concerns in South Africa or the metaphorical water on the South African yacht that are quite unique to South Africa. Just the other day I posted up a pretty scary chart on LinkedIn, which demonstrated how the JSE top 40 companies, some of the best companies in South Africa, how they fared up against the S&P 500, some of the best companies in the US, in US dollar terms. And I mean, the contrast was quite stark, it was quite scary and alarming. Over the 10-year period, the S&P 500 companies soared up over 300%. Well, over the same period, the JSE top 40 kind of stagnated. It didn't really move much. And so, you hear stats about, that market capitalization of Apple is 5 times bigger than the entire GDP of South Africa. And it makes you think, it makes you wonder, what would be the benefit? How important is it as a South African to have access to some of those offshore assets and not be tied into the assets that are just within our small little borders? So Anthony, maybe perhaps you could speak to this one.
Yeah, it goes back to my point earlier of just being diversified, and let's take the Rand as an example. It is one of the most liquid or the most liquid emerging market currency. So it's used as a proxy as an emerging market currency. If somebody wants to hedge, I don't know, Turkish lira as an example, they'll use the South African Rand. So the South African Rand moves because of domestic issues, it moves because of international issues. And it's very volatile. I mean, we've all been on that roller coaster, and it's not pretty when it's going the wrong way for you. But over the long term, the Rand has deteriorated pretty much according to the differential of inflation rates between South Africa and international markets. So let's just say as an example, South Africa inflation of, I don't know, pick a number, 5%, and the US of 2%. The currency should devalue at around about 3% per annum, which it has done. If you look over the last sort of 5 or so years, it's sitting at about somewhere between 15 and 20% depreciation. So just from a currency perspective, as long as you don't need the money in the short term, it makes sense to get a part of your assets outside of the rand.
I think on top of that is the tax benefits that you get in a place like Guernsey. So apart from the fact that you've diversified, you're in a strong currency, you're hedging against the rand and inflation and all of those beautiful things, you also have the tax benefits. I think what a lot of South Africans don't realize just yet is once you go offshore and you set up a trust or a retirement plan, within that plan, if it's in a place like Guernsey, for example, those structures don't pay any tax. So there's no tax on interest, no capital gains tax. In Guernsey itself, if you don't live there, there's no estate duty. So when you also take the tax benefits into account on top of that, it's really a no-brainer if you can afford it to go offshore.
Yeah, absolutely. And as you know, the way we work at Carrick is we take our clients through a journey of how to invest offshore. Should you do it in your own name? And that has pros and has quite a few negatives. And should you invest in an international endowment provided by local insurers? Should you invest in an international trust, an international company, an international pension? There are some very, very compelling reasons to structure your money when you go offshore. From a tax perspective, it does drive a lot of decisions for South Africans. From an asset protection perspective, and also from a succession planning perspective. So when you pass away, if you think it takes a long time to wind up your estate locally, when you start adding foreign assets, it can extend it by multiple times. It becomes costly, timely, and really, really difficult for your beneficiaries to now make sure that this estate is wound up and they can inherit the proceeds. So to make sure that we call it seamless transition of funds to your beneficiaries, and it's so simple. I mean, it's about doing the simple things right. When you get money offshore, make sure you're working with someone that actually knows what to set up for you properly, the right structures for you. If it's not a structure, if it's in your own name, that will is even more critical. And unfortunately, we've seen many occasions where people are not structured properly, and it's taken 4 or 5 years to wind up estates, where spouses have to get on an aeroplane and fly over, that a bank won't release funds until they physically see. I mean, it's archaic, but unfortunately it is a reality.
And the question begs, looking at that graph, what sort of returns could you expect by investing offshore versus locally, considering that the JSE flatlined, plateaued, while the S&P 500 soared? And is it the same getting 5% in US dollars as it is getting 5% in rand terms?
Yeah, so that's the $1 million question, right? Is what type of returns can you expect? And that is very dependent on what type of risk you take. So the more equities or stocks of companies that you hold, the higher the risk, the higher the expected return. The majority of our clients are more of a balanced risk profile. So we blend asset classes. We use a building block approach. We use the best managers in the world for those different building blocks. Rough number, our 4-year average annualized return in our US dollar balanced fund is sitting at 9%. So every year, on average, over the last 4 years, you've made 9% in dollars. And that goes all the way through to our high growth portfolio, which has made 17%. So really it does differ. We are coming out of a 10-year bull market. Yes, we've had a big correction in March this year, but for all intents and purposes, the market has recovered the majority of the losses. Certainly the US has recovered, and so has Japan. Europe and the UK are still laggards. But if someone says to me, rough numbers, Anthony, on a balanced portfolio, what can I expect? I'd say anywhere between 5 and 7% per annum in dollars. So not shooting the lights out, but if you add that, let's say 3% currency differential that I spoke about, you're starting to get close to 10%. Now in South Africa, the last 5 years, you haven't got anywhere close to that, unfortunately.
Absolutely.
Not only have equities done badly, but the number of equities has decreased. The number of companies that have delisted has actually been quite remarkably high, meaning that pool that you're fishing in is even smaller. And of that pool, there are only a few that are liquid. There are a lot of illiquid trades or counters on the Johannesburg Stock Exchange where you can't get in and out quickly. So you end up investing in the likes of a Naspers that I think it makes up around about 21 or 22% of the JSE. That's a wonderful company, but just the concentration risk is very, very high, and that needs to be considered.
So you've mentioned, Guernsey, retirement structures, trusts, potentially international endowments, managed portfolios. I feel there's a bit of an elephant in the room when it comes to this. This all sounds great. We understand why we need to do it. We understand what it is. But is this, from a cost perspective, feasible for South Africans to do? Why would I consider taking a portion of my retirement savings offshore? Is it feasible, to have that incurred cost in doing so? And what could you compare it to locally? Is the cost similar on an ongoing basis? Is it more expensive? Is it less expensive?
Yeah, I'm going to talk to you about the cost from a trustee perspective. I think it is more costly when you go offshore. When you compare annual trustee fees that you would pay to a professional trustee offshore versus South Africa, there is quite a big difference. I think what you do have to bear in mind is that the South Africans tend to convert to rands, which we shouldn't be doing. So to give our audience an idea of what is a reasonable trustee fee when we talk discretionary trusts or pension trusts, pension structures, it should never be more than 1% of the assets under management. That then becomes an expensive fee. So hopefully that will help clients to determine when does it make sense for them to start to take funds offshore. And you've got different types of retirement structures offshore with different fee structures, and then you've got different types of trust offshore, and they also have different fee structures. So your financial advisor that you talk to need to be aware of all these options out there if he really wants to do a good job. Because then we can go, while they're doing the fact find, we can really eliminate the more expensive structures or the inappropriate structures for that person, and we can end up with the ideal structure. But it needs to be a financial advisor that understands and knows what is out there. Otherwise, he's going to be pushing the one product that he knows, and that might be an expensive product. And we know that sometimes happen. And therefore, I think it's very important, I think you've mentioned it earlier, Anthony, is that it's important that you speak to an experienced financial advisor who really understands what is out there and who will know at what stage does it make sense to go into a structure around your offshore investment.
And just speaking about costs and the opportunity costs therein, in South Africa we've got so many structures ourselves. We've got our endowments, we've got our retirement plans, we've got our trusts, also our discretionary trusts, and they each come with their own unique benefits. Are there similar structures like what you were just referring to earlier internationally to these local structures? And what would motivate an individual to, let's just say, rather using the international retirement plans you were referring to earlier, as opposed to, say, just contributing to their RAs and getting their annual tax deductions?
Right, obviously there's tax benefits when you invest into your local RA. I think after you've done your 350,000 Rand per year or your 27.5%, whichever is the highest, you can start to consider going offshore. And it will sometimes be initially in your own name, then you start to look at structures. But the international retirement plans are very similar to your local RAs. You have a trustee, you have trustees, but that vehicle is really just the umbrella around that. You still have a financial advisor who decides where to invest, what funds would make sense. So the nature of the game doesn't really change when you go into international retirement products. It's very much the same thing. Maybe slightly more control to the South African investor when we talk offshore retirement plans, because they would sit with their financial advisor and they can really plan the type of investments and the type of funds, and the choice of shares can really come down to sitting in this room and making that decision based on their preferences. Whereas with local fund managers and investments into retirement plans, you as the individual that's investing into them, you don't have that much of a say about that. That, I would say, is maybe different when it comes to the choice of investments, but the actual structure, what it looks like offshore, is very similar to what it looks like in South Africa. But maybe one thing to point out is that you don't get the tax deduction when you make a contribution to an international retirement plan.
Right, then further elaborating on the costs, Anthony, maybe this is more directed for you from an investment perspective. If we had to, not only look at the structuring side, but the underlying investments, if you had to compare the cost thereof between South Africa and offshore, what does that look like for a South African?
Yeah, it's a very, very good question. The costs in South Africa vary greatly. And in general, I think I can make a broad statement saying that they're more expensive than offshore. And that is a broad statement because there are low-cost options from exchange-traded funds, which are passive trackers, all the way through to actively managed funds. The key, so first of all, Carrick is agnostic to active versus passive. We think that markets are inefficient over time periods, like the 2020, what we've gone through, and active managers have got a very, very specific role to play in the portfolio. And you need an advisor and a manager that can adjust that balance of active versus passive. But in general, if I look at Carrick's balanced fund as an example again, the total expense ratio, which means the total cost of the investment package, including investment managers and all underlying funds, is sitting just under 1%. So I would say that that's a fair exchange for what you're getting. You're getting a proper blend of different asset classes to your personal risk profile. And I think, what I find that our clients respond to very well is having portfolios built specifically for them. So a really tailor-made, bespoke service. Putting everyone in a balanced portfolio is not necessarily, always the right thing. Clients like a share portfolio where they can have some say in what shares are bought. They can discuss it with you. We use structured notes within our portfolios. As you know, it's a very, very low interest rate environment. Income, if you had to say to me what are our clients most concerned about right now, it's generating income. You put your money in a bank account now, you're getting very low interest rates. Money market, very low interest rates. Then you're paying tax on that. So you need to be able to navigate those asset classes, make sure it's done in a cost-efficient way.
It's an interesting, and combining all of these factors together. So, we've addressed the costs, we've addressed the needs, the whys. What would you say is the best time for someone to take their money out of the country? It's a question that's going to get asked over and over again, but we know in South Africa there's a need for it now based on our challenges, based on diversification. But from a global perspective, if we look at it, we've just had the US elections. There's the threats of a second COVID-19 resurgence in infection rates across the world, talks of Brexit. The list kind of goes on and on and on. When, based on the market's volatility and its ups and downs, when would you say is the best time?
Can I take this one?
No, please do.
Okay. So unfortunately, clients always do it at the wrong time. When there's panic on the streets and everyone only talks at dinner parties about the rand, and everyone goes and moves out into foreign currency just at the worst time. And we've gone through a period now where the rand's actually strengthened quite well. So the answer quite simply is no one knows what the rand is going to do. I like to use the concept of dollar cost averaging. So I've got a couple of clients that sort of religiously every quarter they move money out. But if you've got a lump sum and you want to move it out, it's very difficult. I would do it in 2 or 3 tranches. And the key, just from a psychological perspective, so you don't drive yourself nuts, is once you've converted it into hard currency, think of it now as you've got whatever the number is, $200,000 or £500,000. You can't keep converting it into rands, because there will be times when you think that you were the most sort of clever person on the planet, and there'll be times where you've got your head in your hands because what have I done? The rand strengthens so much. The rand is volatile; it goes up and down, like I mentioned. So if you had to say to me literally today that you've got some money, should I move it offshore? My answer would be yes. I do think that that now's a good time. Could the rand strengthen from here? It absolutely could, but over the long term, I honestly feel because of that interest or inflation rate differential, because of the issues that South Africa has got, I do believe that over the long term, you won't regret moving your money offshore.
I suppose it all kind of comes down to what Warren Buffett said, which is, the best time to plant a tree was 10 years ago, a second best time is today.
Yeah.
But from everything that's been said, it makes so much sense from a South African perspective to get some assets offshore. There's so many benefits from tax through to risk, through to returns. Why wouldn't I just consider liquidating all my local assets and just taking it all offshore where it's safe from all of the risks that are quite unique to our borders?
Yeah, I think it's all about diversification, but that's really talking to the investment. I feel embarrassed when I sit among all the investment people, so I think you answer that, but it's about diversification at the end of the day.
It's about diversification, and it always comes down to the individual client's needs. Like literally, if somebody's got a huge amount of money and they've got enough in South Africa to sustain their living, I've got no issue with taking all of it offshore. It's matching assets and liabilities. For a retired person that needs a specific amount of income every month to cover their costs, you can't take that money offshore, because what if the rand strengthens?
Yeah.
What if those stock markets go through a bad time? You don't want to be withdrawing the money, first of all, when the rand's strong. You don't want to be withdrawing the money when the markets have gone down. And that, again, is speaking to someone and getting help from a professional that can sit with you and go through your expenses. And I can't tell you, literally 90% of our clients have no idea what they spend on a monthly basis. And when I ask them to do a little exercise and come back to me, it's double what they thought.
Yeah.
And so, match your rand expenses with rand income, and then have a good discussion about what to do with the balance. As a barometer, half your money offshore and half your money onshore. If the rand strengthens, fantastic, because you're living in South Africa. Half your money is in South Africa, your job's in South Africa, your property's in South Africa, your family's in South Africa. I'm a happy man. If it weakens, I'm the cleverest man because I've got half my money offshore. So you can't argue it like that. Why watch the rand every day and freak out when unfortunately there's riots in Cape Town today. But you know what? There's also a beautiful mountain. The mountain's going to be here for the next million years. The riots will dissipate. South Africa will be okay. I really honestly believe that this too shall pass, and that Coast Guard that's going to come and save us is going to be the right economic policy set by government. We're going through what Brazil went through with what they labelled Operation Car Wash to try and get rid of the corruption. It's happening. Yes, it's happening slowly, but it's happening. And South Africa is, like I mentioned, a wonderful place. I'm not going anywhere, but I really, really urge our listeners to not be negative. Find your place, in bailing out the yacht, pick up that bucket, and it's just, negativity just feeds upon itself. And, help South Africa. If you're going to stay here, fix it. If you're going to leave, leave. It really, really is as simple as that.
I absolutely love ending on that note. Anthony, Corinne, you have told us so much today. I've certainly learned a lot. I hope our viewers at home feel a little bit less intimidated about the whole aspect of going offshore. Thank you so much for your time today and for your wisdom. For our viewers, if there are any questions that we didn't answer today, you can drop us a mail, the email that's on your screen, or please contact your Carrick financial advisor. Thank you so much for joining us today, and please keep safe.